Hit it. Let's try this again.
What happened?
I didn't have my script up.
Oh my god.
It was script up. Anyway.
Here we go. Hit it.
It's Friday, September 16th, 2022, episode 195. I'm Patrick Ceresna.
And I'm Kevin Muir. It's been a while, but we're pleased to welcome Harris Kupperman back to the show for Kuppy's Corner. We talk markets and find out what Harris has been up to this summer. Then our favorite technician, Patrick Ceresna, tells us what the heck is going on in these crazy markets.
And we end with our segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way, so stick around. We got a great show. Lena, hop on. What beer am I drinking this week?
Oh geez, I can't say this name properly because I can't roll my R's. Ariaka Russian Imperial Stout.
Now, first of all, this is brewed in Spain, a Spanish brewery, so no sanctions have been broken in the importing of this beer. But let's give this a go.
So it says here, Ariaka Imperial Russian Stout is a high-proof black beer with roasted nuances of coffee and dark chocolate and notes of vanilla, wood, and black fruits.
Yeah, it's this is a stout for sure.
Sounds rich.
It's coffee thick. It's
no. Okay. We'll take your word for it.
All right.
Let me do our side effects. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include prolapsed turtle head chart syndrome.
Oh, jeez.
Convexity cankles. And this is for the Canadians in the audience. Midland Walwyn waves only affects ex-employees in their 50s.
All right, let's get Kuppy on. So joining us now is Harris Kupperman. Hey, how you doing, Kuppy?
1 second. It's Kupperman, isn't it?
Yeah, thank you. Fuck
It's
me.
Kupperman.
Actually, let's not cut this. Let's just leave it in.
How many times? No, don't do it. Let's do this one
going.
more time.
Let's keep going.
All right. Fuck me. All right, Kuppy, how's it going, buddy?
I'm doing great. Life's good.
That's. I heard you got a new office going up down there. How's what's up? You have your new your company set up down there with all your traders?
Yeah. We hired 4 analysts, for the hedge fund and also for Cadam, and we moved to some great office space right on the water. And it's taken almost a year to build it out because there's a shortage of windows, but they finally got windows, and now we're able to move in. If I had known anything about how the supply chain worked, I probably would have done it different. But it's good. We're right on the water, and you and Kev are both welcome to come on down here and trade out of the office. It's a lot nicer than Toronto in winter.
It's probably a lot nicer than Toronto even in the summer, Kuppy.
Maybe. I sent you guys pictures, right?
I know you did. And I must say, I got one more kid in the house. This is Kevin speaking. I got one more kid in the house, and once he's gone, you might have a full-time visitor there as the wife and I are empty nesters.
Great. Come on down.
All right. We're looking forward to it. Okay. So it's been a while since we've had you on the show. Summer got in the way of it. And as you said, you were busy with your setting up your new office. Lots to talk about. Why don't we jump right in? You're somewhat, I would say, it's not that you're worried about the market. It's not like you're expecting a huge crash, but you're positioned defensively. Why don't you tell us why you're positioned that way and what you think is on the horizon?
So I've taken my exposure down starting, end of Q3, early Q4 last year. It just seemed obvious that inflation was out of control and the Fed would have to do something. I mean, the Fed didn't realize it at the time. They were still going on with QE. I mean, they kept doing QE into Q2. But at some point, they realized that inflation got out of control. I mean, even Kashkari got hawkish. And it's a mess when Kashkari gets hawkish.
Having said that, 1 second, I'm going to interrupt there because he's no dummy. One of the things about him is that he's not a voting member right now. So if you actually wanted to be hawkish without affecting the real economy and you're really a dove at heart, this is the time to pretend like you're hawkish.
Yeah. I don't know what's going on over there. I mean, look, I like to use this analogy, and I've used it before, but it's like when you go to one of those really old, shitty motels. You kind of turn the knob in the shower, and you turn it a little too much, and it comes out like face melting, scald your skin off. You turn it 1 degree to the left, you freeze to death, and you just never can calibrate the thing. And I mean, I guess you could calibrate it if you want to spend the rest of your day doing it, but no one wants to calibrate their shower in a shitty motel. You just want to get the hell out of there. And that's how the Fed operates. They pushed too hard on the stimulus side way after the crisis was over with COVID. And now, it's kind of swung too far. They have to go too far now, in terms of raising rates in QT. And, given what they've already done, they've probably overshot again. I mean, Fed policy works with a 6 to 18 month lag. And, they're looking at the most recent data point and not the fact of where data points are going to be, a year from today. I mean, Kev, you're a trader. Patrick, you're a trader. I'm a trader. The guys at the Federal Reserve, I mean, they're just bureaucrats. And, they're used to guys coming to them and saying, hey, the CPI is a little hot. Do something. Whereas, you or I would be, hey, where's the market going to? Let's get in front of that trend. And I just don't think they can see where things are going. But if you look at data points, and we keep getting data points, I mean, things aren't so hot in the economy. And meanwhile, they're talking about another 75 and then another 75. And I mean, I feel like they're just trying to one up each other and just.
They're like Oprah. Everyone gets a 75.
Yeah, 75 is the new 25. But I mean, if you look at the history of the Federal Reserve since I started in this industry, they keep pushing until something breaks and then they panic. And it seems like they're going to break something, except, this time it's not the banking system. They're probably more likely to break Europe or Japan or private equity. I don't know what they're going to break, but they'll break something. And they seem destined to try to break something. And as a result, I've just kind of pulled back because I knew they'd overreact and I knew they'd break something. And, I want to have a bunch of balance sheet strength because when they break something, I want to buy, really, really cheap assets. Like if you look at the history of investing, I mean, most of the time things are kind of sort of fairly valued. You kind of go into these weird dark corners and you find, something that's cheap, or you find something that's inflected and then people are ignoring it. But most of the money's made, once every 5 to 10 years when the Federal Reserve breaks stuff and you could buy things at 10 cents on the dollar and then sell it back like 18 months later after they flood the world with liquidity. And so I kind of want to just be sitting on my ass and waiting for that.
Now, do you think that this is going to be something that occurs in the next month, in the next quarter, the next year? Do you have any sort of timeline in mind?
I don't know, but I mean, the market's going down like 1% a day. It might be soonish. I don't really know. I really don't know. I mean, we have to remember, like December of 18. I mean, the market was going down like 1 or 2% a day, also, and everyone kept saying, like stop it with the rates, stop with the rates, stop it. And he's like, well, we're not quite there yet, and everyone's like, just stop it. And then one day he woke up and he's like, yeah, we're done, and the market just came screaming back, and so, nothing broke then. It just came screaming back because he said he's done. And of course, he told all his friends he was done about a week before he told the world. And so, you're going to be positioned before the turn also. And so it's a hard balancing act. And knowing myself, I'm going to commit too much capital too soon and then feel like a moron for about 2 weeks. And then I'll make a lot of money. So I just don't know when. I've really not committed much capital yet.
Okay, so let's start talking about what you're picking away at and what your ideas are here. Do you almost think that we're going to, because we're late cycle and that this is going to be a recession and therefore we should start going and looking at early cycle trades soon?
I don't know.
Or you just like your individual names, you don't even care. I'm just going to buy cheap stuff.
Look, if you buy cheap stuff that should be, sort of immune to economic cycles, and you buy it at 1 to 3 times cash flow and it's growing pretty fast and it's got a better than 50 ROIC, it's hard not to make a lot of money. And, if it doesn't go up, they're just going to buy back all the shares. And so that's what we've seen in my names. They're just buying back all the shares. Like, I don't really know. I mean, I'm an inflection trader. I wish there was some great inflections, but it feels like the core inflections I'm in are doing a pause. Oil's kind of taking a pause. It's a great trend. It's just taking a little pause here. I think the pause in oil probably ends sometime around Christmas, though, because you have a couple of events that are all kind of converging at the same time. You've got the SPR releases, which will end after the election. They're going to make Xi king for life, and then they probably stop with the Chinese lockdowns. And then the Mexicans always go out and hedge all their oil, and that usually they're just going out there slamming the puts. And so that's going to cap oil for a bit. But that all sort of happens around November. And so I feel like it's all going to work its way through in December. And in the end, take away, those first two variables and you have a market in deficit. And markets in deficit usually go higher if it's commodity. So, it's kind of like, with uranium too. It's all just kind of in a pause for me.
All right. Before we talk about uranium, let's stick on this energy and this oil specifically. I'd love to hear your thoughts about how insane FinTwit would go if Biden actually ends up making money on his SPR sale and then purchase.
It's impossible.
Come on. He might do it.
I'll buy you a steak dinner if he successfully traded it. What do you think his VWAP is on his sales? Like
I don't know.
105?
Yeah, and he could go out and buy. If he was smart, he'd be out and he'd have a bid in the 2023s, and he would just be picking away sub 80 right now.
So you think he's just putting on a curve flattener?
Well, he should be doing that. Let's face it. That was the problem. The market was demanding liquidity right now, and he should have provided that liquidity and gotten paid for it.
I think the only one in this government that knows how to trade that's Pelosi.
I mean, well, who knows? Maybe she's giving him advice.
Maybe, but I mean, Biden doesn't even know where his pants are right now.
I'm telling you, the FinTwit or like energy, whatever it is, EFT, they would lose their shit if he ends up making money and gets it back. They would lose it. Don't you think?
If he buys back all 250 million barrels, I'll buy you a steak dinner. If he could buy it back up.
Yeah, well, listen, he might do it. I'm not saying stranger things have happened. Let's put it that way. Okay, so let's talk about this. So you think that we're gonna still have another couple of months of ugliness in energy? Not ugliness, but at least without the rally really reasserting itself until December in crude oil.
Yeah, that's kind of how I think about it. We need to work through all these overhangs. And look, commodities tend to consolidate. And it's in the consolidation phase and the pullback where, producers say, man, maybe we shouldn't really go reach for that extra drill rig because who knows? And that's what sets up the next run. If it was just, going in a linear path, everyone would just add supply. You need to kind of scare people a little on adding supply. You got to make them second guess themselves a little. And I think there's also a lot of latent demand. I mean, I always like to tell the story of my dad who, he buys heating oil. He lives up in New York. He buys heating oil twice a year, once in the spring to heat the pool and once in the fall for heating the house. And, he's usually topping up the heating oil around now. And he keeps telling me it's going to pull back. It's going to pull back. I'm waiting. And meanwhile, he usually keeps the tank about half full. And the tank's literally just on empty. I think he had the guy come and put like 50 gallons in or 100 gallons, and it's a big tank. It's like 2,000 gallons or something. He just didn't want to pay the price, and he's been waiting and waiting. But at some point, he has to pay up because winter's coming. And right. I think there's just a lot of guys like that. I mean, I asked him, and him and all his golf buddies talk about how to save a nickel on heating oil. They're all in the same boat.
They're all short heating oil. Every retired fellow in upstate New York is short heating oil with his tank.
Pretty much, yeah.
All right, so let's talk a little bit about uranium then. Go on to your next favorite one. Since we've spoken last, we had Japan coming back and saying that they were going to restart some plants. Do you think that was the inflection point that's going to drive the new bull market in uranium?
Yeah, I really do think so. I mean, look, we are in a bull market. I mean, it's been almost a year since I put the position on, and it was at 31. Now we're at 49. I mean, that's a good bull market. I'm winning.
Yeah, no, fair enough. Completely great call, but it had gone sideways to down for a couple of months there, and it seemed to be there was a lot of good news coming and stuff, and then it was really the Japan that seemed to be the trigger. Would you agree?
Yeah, well, I think it's a lot of triggers. I mean, as an inflection investor, normally things don't play out like you expect them to. It either, goes a little worse or a lot worse. A lot of these things just kind of, flame out, and you kind of look at it, it's like, yeah, the trend is still there, but it's not really, it just doesn't have any heat behind it. It's just, I want to bet with the trend win this fire. And, a lot of these times you're just kind of like, yeah, I sort of got it right, sort of wrong. Let's just take a mulligan and move on. And it's very rare that something like uranium comes along where every week there's a new data point and it says that the trend's strengthening. And I was pretty optimistic to start with, but it just keeps getting better and better. I mean, like you said, the Japanese, they're turning the reactors back on. California turned a reactor on. Michigan turned one on. You have Europe that's suddenly having a nuclear renaissance, except for the Germans because they want to freeze to death. But even the French are kind of like, yeah, this nuclear thing's kind of cool. And I really do think that sentiment's changing because in the end, if you want to have baseload power, it has to come from uranium. It's the only non-carbon baseload power option, really, that's viable for mass use. And I think Europe's tried everything else, literally everything else. They've come around to the same solution they had in 1970.
Yeah, it's actually shocking. Kuppy, as a little aside, you're talking about baseload power. I was thinking about, I was looking at Canada and I was going through the different provinces and I was thinking that really electricity is going to become the new oil as we go more and more to electric vehicles and all these different things. And I was thinking that we should all be moving to Quebec, the Belle Province, because they have all those hydroelectric dams. And it's really,
they're going to be in good shape. Yeah.
And I know Google, for example, chose Montreal over Toronto because the electricity was just so much cheaper. And I'm thinking to myself, maybe I should be making the switch as well. And not only that, I think the nightlife's a lot better. And Patrick, even more importantly, they got La Bête Sans Compte everywhere.
Yeah, absolutely. They serve it on tap there.
Yeah.
Too cold for me.
Yeah, I know. That's listen, Puerto Rico or Quebec. I love Quebec, but I think I'm going to choose Puerto Rico as well. Okay, so let's talk about how you envision this uranium playing out from here. First of all, is your favorite place still the spot or the U.UN, and are you still not looking at the underlying mining companies?
Yeah, that's just the way to play it. It's the spot. Mining's just a terrible business, and I don't think beyond $100 a pound. I don't think any of the miners will get. You won't get paid for it. No one will price in their forward above that. They might not even price in above 75 because a ton of supply is going to come back online. But I think there's going to be a gap period for a couple of years where there's a real shortage, and you still have this spot entity going out and buying pounds. I mean, they bought 800,000 pounds last week. They bought 40 million pounds since the entity launched. I mean, that's cleaned up a lot of the residual supply. I mean, I thought there was less supply, but in the end, they've cleaned up a bunch of that supply. And I think a lot of these reactors still need to procure supplies. And, especially with China and India going full speed ahead at building new reactors, like they're going to need supplies too. I think eventually you're going to have a situation where there's a real shortage, and you can't have a shortage in nuclear power because it's a multi-billion-dollar paperweight. It's not like other industries where you can switch to something else or, you have other options. And I really do think it's going to end up being one of these insanity trades, and it just hasn't happened yet. And like I said about the oil, it's all just kind of taking a pause. I wish you could come on your show and be like, hey guys, I got this great new trade, but I tend to put trades on and ride them. And unless something breaks, I go with it. And it seems to be working.
As you were explaining that about the whole the spot, I was thinking to myself, it really has taken those pounds off of the market because in essence, that closed-end fund is no longer going to sell those, and they're not available to be actually used as a power source. And I was thinking about it, if it all of a sudden, if we get more demand and people start to realize the fact that this is a good investment, they're going to buy more spot, which is going to take even more off of the market.
Oh, yes, it's reflexive, right. Massively reflexive. So when spot goes above 18, I think is the old high. I think the move from 18 to 50 is going to be in just a couple of months, and it's going to be like Pac-Man just buying hundreds of thousands of pounds every day. It's funny. It had this quick surge as everyone realized what it was. I mean, it's going to act a lot like Grayscale did in terms of consolidating all the Bitcoins. It's kind of funny, actually. Bitcoin peaked out right when Grayscale stopped trading at a premium to NAV. Right. As soon as that arbitrage disappeared, that's when Bitcoin peaked out because they stopped raising new capital to buy Bitcoins. And I think people realize this is what SPUT is also. It's just going to consolidate all the uranium. And, it had this huge surge from 11 to 19 or something, 18. And then it pulled back and it digested it. There was a lot of wise guys and hot money and, hedge fund guys that They can't stare at anything that's not going up for more than an hour. And we had to work through all those guys. And it took 6 months to work through that crowd. And in the meantime, all this good news keeps coming. Russia is one of the largest players in the enrichment market. And suddenly we're not that friendly with Russia. So where does the enrichment come from? Which means that you're going to go from underfeeding to overfeeding, which is probably going to be somewhere between 10 and 30 million pounds of expected supply that's going to leave the market and actually flip to expected demand probably. You just have all these things. I'm probably going to write a blog post about it because it's just so bizarre that the trade is working out so much better than I expected. And here we are, and the price hasn't responded yet. But I feel like it will, and probably soon.
I think at one point you and I were chatting, and you said something to the effect that you think this is the biggest opportunity of your life. Do you still feel that way?
Yeah, I don't know what biggest opportunity in my life, but I think it's the best trade on my screen.
Look, Kuppy, you're prone to a little hyperbole every now and then.
Yeah, sometimes. But, I think it's one of the great trades because I know it's super reflexive, and I know they're going to eventually squeeze the supply. And once the price starts responding, I just know that people are going to keep going in. In the end, it's a 180 million pound market that trades at let's call it 50. It's a $9 billion market. Like AMC apes trade that much in a day or two.
Yeah.
It doesn't take much for retail to realize what's going on. And, they want to stick it to the man by buying apes and JPEGs of apes. And, here you are, you want to stick it to the man or the utility. You just buy Spud and, you front run them.
Yeah, no, it is a fascinating story. Okay, let's talk about some of the things that haven't worked as well. You and I both were somewhat constructive on home building. That other guy that's on the line was not as constructive. So he got this one right. Yeah. Has the Fed's desire to cause a recession made you rethink your home building trade at all? Not home building. I guess yours is a slightly different nuance than just pure home builders. Why don't you tell us what it is and explain to us whether you changed your attitude with the Fed's change of heart recently?
Well, the Fed isn't helping, that's for sure. My P&L looks like shit. But I think the trend is still very good. There's a shortage of housing, and I think the national numbers don't show the true shortage because of all the migration that's happening of people leaving the Northeast and California and all the other shitty places and going to Florida and Texas. And national data doesn't show just how tight the markets are and how much demand there is for new construction. And I'm playing a home building in this migration trend through two companies, Builders First Source and Louisiana Pacific.
Why don't you give us the symbols? Sorry.
BLDR
yep.
and LPX.
Okay.
They produce components for houses. LPX is one of the biggest players in OSB, which is a structural component, and also siding for homes. And then Builders First Source produces all sorts of components for home builders. They're both super dominant in their industries, massive consolidation over the last 15 years since the last peak, as a bunch of players went out of business, got consolidated. I think they have structurally better margins than people expect them to because of the consolidation. And they trade at like 2 times last year's cash flow. And they buy back like 10% of the shares outstanding every quarter. Not a lot has to go right for you to make a ton of money on this. You just need people to stop going on Twitter and talking about how bared up they are on housing. In the end, the housing market's doing really well still, given that we've had the fastest increase in rates in the history of finance.
Yeah, no,
I think it's working out.
So, by the way, I was reading a report the other day, and this is something I hadn't actually considered. I think it specifically was copper, but it could really be a wide variety of different inputs into the houses. But a lot of this move from the north to the south that everyone's talked about as people left New York to go to Florida or whatever, when they're going to Florida, they're buying a bigger home. So it's actually, in terms of raw materials being used, even if they're selling their New York home and going to Florida, it's also there's actually more demand in terms of for copper and for pipe and for all the all the different pieces, the aluminum, everything else that's going into a house.
Yeah, homes are getting bigger. Home design has changed dramatically. Going to a home from 1950. Everyone talks about as a percent, the multiple of average income and how homes are much more expensive than they were. Was it like 2 years or 3 years of salary back in 1950 versus was it like 8 or 10 years now. I forget the exact number. But then go to a home from 1950. It's like 900 square feet. It's a 2-bedroom. Like, of course it costs less. I mean, these things are tiny. And, the kitchen's kind of hidden in a closet and there's just like a range top stove. I mean, think of a modern home. I mean, the kitchen is the centerpiece of the home. It's, you're going to have a center island and you have all your fancy appliances. And I mean, it's just, homes have totally changed. And even if you have a legacy home, I mean, these things need a ton of spend for remodeling. And as you see more and more people that don't want to move because of the interest expense, they don't want to take on a new mortgage at a higher rate. I think they're just going to dump more capital into their existing homes. And when I say dump more capital, it's probably building a second bedroom and a deck and redoing the kitchen. I think there's just going to be a lot of capital going into these homes, especially with work from home also.
And so that'll be beneficial to the BLDR and also the LPX versus, let's just say, a Lennar or a
Horton. Lennar is just a terrible business. Basically own a bunch of call options on land, and then they have to go build the land. And when things are going well, you get like a 20% return on your capital, which I guess is okay. And then when things stop, like they're kind of freezing up right now, suddenly you have these call options that expire. You got to still build the homes, but you're going to build them at crappy margins, and you're going to build them spec. You're going to, like, what do? You have to scale up really fast. Your teams, you go, add a bunch of crews and you scale it down. You have a bunch of communities. You scale up, you scale it down. Like, it's just a terrible business. And in the history of home builders, when the cycle changes, you lose like a third of your balance sheet because you write off all the stuff you have. It's just, I don't want to play that. I think we're going to have more of a start-stop sort of economy than just like a full speed ahead. But builders, when things slow down, what happens is their working capital releases because they have less inventory, they have less receivables, and the bunch of cash comes on the balance sheet. They buy back more stock. Like, everything leads to them just buy back more stock. I just think it's a better business.
Okay, so let's talk about that. Why do you think we're going to get more of a start and stop economy?
Well, because the government keeps meddling. I mean, just what we talked about a few minutes ago. The Federal Reserve pressed too hard on the accelerator, then they slammed the brake. And then once they break stuff, they're going to slam the accelerator again. They're just going to keep doing this over and over again. Meanwhile, while they're trying to pull back on the stimulus, Congress passed, $1 trillion of stimulus relief, inflation relief. I mean, if you're trying to fix inflation, the last thing you do is, spend another $1 trillion you don't have. I mean, the whole thing, you have the two parts of the government not really, acting coordinated or thinking, but it's a government. You don't expect them to think. But, you have a lot of like this start-stop sort of economy as a result of just bad policy decisions and overshooting and everything else. I don't really know. I just feel like you're going to see a lot of these like 2-3 year cycles. It'd be great for guys like us that play macro, but it's going to be terrible if you have a business that has thousands of employees. You have to keep hiring people and letting them go.
Yeah, I completely agree. I think there's going to be a lot. I think we've already seen it. We've like, even with this latest CPI number, can you recall economic release that caused that sort of market movement? Because I can't.
Well, everyone was totally off sides. I mean, every single person I knew said it was going to be, high sevens. Some guys thought it would be low sevens, mid sevens.
Yeah.
And the number came out, and I don't think I've ever seen SPOOs trade 120 handles on a single print ever in my life. It just literally printed.
Yeah.
And everyone was off sides.
And it was like, that wasn't a policy response. Like, it wasn't like the government did something that was a policy response. That was an economic release. Very rarely will you see something like that from an economic release.
Well, last week on the show, I forgot who the guest was, but they were talking about the rental rates for single family and multifamily.
Rob Arnett. Rob Arnett from
yeah. He was talking about how there's a lag in the rental rates as it shows up.
That's right. Yeah, with the CPI. That's correct. Yeah.
Correct. Yeah, I forgot the exact terminology he used, but I mean, it made a lot of sense to me, and I feel like that's happening through a lot of the components of the CPI. And the guys who are trading SPOOs, they're just looking at it and they're saying, "Oh, the price of gasoline's down from 5 to 3.5. Let's get long SPOO." And they forgot that gasoline is just one piece of the CPI.
Yeah, and there's gonna for sure. And the other thing I think that people didn't realize is how far the actual expectation had fallen. And people are talking about like, oh, it's going down to 7.5 or even lower than 7.5. I was like, have you looked at the numbers and realized that there's 10 other months of big, huge numbers? Like for them to have gotten like a low 7.5, you might have had to have 2-3% month over month deflation. And that
Right.
just wasn't going to happen. So I was surprised the market was so surprised.
I think there's just a lot of guys that want to buy the dip. There's just a lot of buy the dip mentality. And, it's getting into the fourth quarter now almost. And there's a lot of guys that are down 20 on the year. And it's starting to be sort of existential. I mean, you run a fund, you got to pay bonuses at year end. Like, where does the money come from? If you have no incentive fees, where does the money come from? So you have to make it back. And you can't really make it back on the short side. So everyone's almost forced to keep trying to play long. And they just keep getting chewed up. It reminds me a lot of... in 2001 and 2 or 2008, where you had these wild swings and stuff would bottom and it would rally for a couple of weeks. And then, everyone would just get hit over the head again. And I feel like, that those rallies, they're not just short covering. That's guys saying, I'm taking a stand here because, the price of gasoline's down. And, they're just not really thinking, but they don't have the choice to think. They got to get back to break even or they get redeemed.
Why don't you explain to people what that pressure is like? Because I think that a lot, unless you're there and can really, unless you've experienced it, it's tough to really understand. So why don't you give us the kind of some sort of color and any sort of anecdotes or experience that you've had with that sort of feeling?
So let me give you an anecdote. It's you have like a fund to fund sort of guy, and I've had a few of these as investors. And you have let's say you have 45 days to redeem. You have to give notice 45 days. So it's like November 15, they want to redeem for year end. They send the notice in on November 1, make sure like we receive it, send us a confirmation email. And then on like the 14th, they call you up. They're like, we're not really sure if we want to redeem or not. We want to see kind of like how the next couple of weeks play out. And we want to see, if we have any inflows or outflows, like what our book looks like. We'll let you know on like December 28th. And it's just like, well, how do you run your portfolio? Do I need to scale back? Am I getting money in? Am I getting money out? Do I want to like if I'm up 500 bips next week, does this guy then stay with me? Does he redeem if I'm down 200 bips? Like it just makes you a total mental wreck. And it messes with your ability to think clearly. And now think that you're having a down year, you're down 20. And, because I have these problems when I'm up. I mean, think you're having a down year, you're down 20 on the year or 25, whatever. And, you have a lot of people redeeming you. You have like a third, half your book redeeming you. And you're having these same conversations and you're just wondering like, if I take a shot, what happens? And the net result is guys are just like, nah, screw it. I'll just take a shot. Cause if I get back to break even, the redemptions go away. And if we go from down 25 to down 35, I was getting redeemed anyway. It's not my money.
Right.
And you have this weird thing where guys just take shots on goal because that's what they're incentivized to do.
And specifically, let's talk about those kind of high flying hedge funds that were long all sorts of tech coming into this new year, and they found themselves all of a sudden down. What would be kind of your thoughts about how they would react to that?
Well, didn't they just buy potatoes?
What do you mean? Did they buy? I don't know the story.
Oh, Tiger bought Lamb Weston. They bought the potato stock.
Okay.
They chose the only supposedly. So this is basket of companies. Everyone called them like value stocks, quote unquote value stocks. And you look at them, they're like, these aren't cheap at all. It was like Scott's Miracle Grow. It's just like, no, it's not cheap. It's not really growing fast. Why are all these value guys in it? But it wasn't really value guys. There's like growthy guys being like, I could do value too. I got some Home Depot and some Scott's Miracle Grow. I'm a value investor on the side. And so anyway, Tiger in their 13F, they had some Lamb Western. It's they have potatoes. They make French fries. It's not really a good business. It's not really an exciting business. It's really expensive, actually. I have no idea why these people bought it. Like for the life of me, I don't know why they bought it, but probably check their value box.
Right. And so that's them finally giving up on the growth. But on the way down, wouldn't you see some kind of emotional rallies where they buy higher and higher beta trying to make it back?
Well, they're so big, some of these funds, that they just dominate the VWAP for weeks at a time as they move around. I mean, it's kind of funny. Like a lot of these funds cut back their exposure dramatically in Q2, so that by the 13Fs in Q2, they'd taken exposure down a ton. Then, everything bounced, obviously, in July and August. And I bet you they chased and bought a bunch back.
Right.
It's just look, when you're down 20, you have a fighting chance to make it back. When you're down 50, like you're gone.
You're done.
You're gonna get redeemed. You're gonna get redeemed badly. And what you're gonna see happen in the fall is that as these redemption notices start piling in, guys who are circling the wagons in a lot of these Ponzi schemes are going to be forced to sell. And it's kind of funny. Like, I bet you these guys all know each other. I bet you it was like June, July, and they're like, oh, let's put together a Marshall Plan. If we all buy, 1 million shares of this, we can squeeze it higher and play some gamma games and make our year back. And so you have these like little quarters going on. That's why you have stocks like Carvana that just went, on crazy squeezes and everything in July and August. But you can't put together a Marshall Plan when you're getting redeemed. And one by one, these guys are going to be forced to break ranks because they have to pay out redemptions. And I think a lot of this stuff's going to waterfall into Q4, especially with tax loss selling.
That's a great point. So your argument of that, like the shit that's rallied during the summer, that's fleeting, and that you could very well see new lows in like archetype names going into the end of the year.
Yeah, I think it's inevitable, especially because a lot of these names probably need to raise capital pretty soon too. I mean, look, I played Carvana on the long side, so I kind of expected what was going to happen, but I wouldn't touch any of this stuff now. I mean, Carvana's going to have to do a down round pretty soon. They're going to run out of capital, and meanwhile, all the whole shareholder base is getting redeemed. I mean, these sort of things, and I don't want to just pick on Carvana. There's like a couple hundred of these things. They're just going to keep leaking all year, and I think it's going to eventually just keep pulling the market down. I mean, ignore JPOW. At some point you have to sell your Apples and your Googles because like where else do you fund your redemptions from?
Oh, that's a great point. I can tell you one thing. I've seen this play out in Canada, especially because we had a stock, Nortel, that it seemed to be that was just every Canadian loved it, owned it, and it leaked for 2 years afterwards, and everyone was buying every single dip, and they just got absolutely crushed. And I just would like to remind people of that. Or even if you want to look at something, go pull up MSOS, which is the cannabis closed, ETF. That thing just keeps leaking and leaking and leaking, new lows constantly, and it's the same.
Well, look
deal.
at crypto; it's the same thing.
Okay, so let's talk about crypto. Do you think that's what's like we're headed lower there too?
Yeah, absolutely. I mean, there's thousands of these things, and there should be like none. It's a great Ponzi scheme, and in an environment where they print a ton of money, Ponzi schemes do well. And I want to be very clear: there's nothing wrong with owning a Ponzi scheme. I mean, I've famously written quarterly letters to clients and said we own multiple Ponzi schemes. We own best-in-class Ponzi schemes with incredible promotion on Twitter. Like there's nothing wrong with owning a Ponzi scheme. The mistake is owning a Ponzi scheme and not realizing it's a Ponzi scheme. If Kathy Woods had gone out there and said, we own a collection of Ponzi schemes, we've curated this collection of Ponzi schemes together, and you could buy into my Ponzi scheme of Ponzi schemes, everyone would be like, oh, cool. I mean, instead, they kind of masqueraded and pretended it was a business that they owned. And I think crypto is going to be a lot like that. I mean, Ponzi schemes are really fun on the way up, and they're kind of depressing on the way down. And one by one, these things are kind of deflating. I mean, in the end, I read a study that like 100 billion of VC went into crypto to create new products, and no one can name me a product created by crypto that's doing anything in my life.
Yeah.
All the best and brightest people in technology globally, not just in the US, were paid ungodly amounts of money to take crypto and make it into something useful. And a decade later, they still haven't found anything to do that like impacts my life. It's different. So like with the internet, everyone would be like, oh, Kuppy, like in 10 years, the internet will be bigger than you ever thought it would be. And, back then, the internet was basically just like pornography and trading stocks. And I was like, yeah, I could see it. And everyone's like, oh, crypto's going to be bigger than you ever could think it would be. But like, I don't see what crypto does yet. For the life of me, I don't get it.
Yeah. I'm with you.
Oh, you're a boomer.
Yeah. Well, yeah. No, he's not. He's a millennial, actually. We're the boomers, Patrick.
Oh.
I've always said, though, crypto is a solution in search of a problem. I've like everyone will say decentralized networks, they're so important. And I'm like, tell me a network that was centralized that was a problem for you. Like
The only crypto that I think has an actual use case is Monero, because you could buy illegal stuff and the government can't track it. And when you think back to Bitcoin, the Silk Web basically made Bitcoin into something that people needed, because you could buy like drugs and illegal stuff.
Yeah, so the child pornographers, it's great for them. But like, yeah, listen, I know I'm going to get all sorts of hate mail and stuff.
Hey, I didn't say nothing about porn, but but if you want to do illegal stuff, you need a certain amount of working capital, and as a result, the market cap of Bitcoin kept growing because all the people doing illegal stuff needed working capital. And you can see this in Monero. I actually own some Monero. It's the only one that I think has an actual use case. I don't think any of these other things have any reason to exist.
So, Kuppy, lots of changes happening at Kedem and at your hedge fund. First of all, I'm amazed. It's like you have a full staff now. How many people you got there?
I think there's 11 of us.
Seriously? There's 11 of you?
I'm not kidding. There's like 11 of us, yes.
How many did you take down to Puerto Rico with you?
5.
5. And are they all like single folks that are enjoying life on the island?
Well, no, they're working. We have a hedge fund to manage. And I have a publishing empire, too.
Publishing empire. First of all, you not only have you got a publishing empire, you also have a great the Kedem Happy Hour. And I'm just going to give you a chance to plug that, because for those that are interested in uranium, next week you have a can't miss episode. Why don't you tell people who you're getting on and how that works?
Yeah, sure. So we have Kedem, and we wanted to kind of spice it up a bit. And one of the things we do is a monthly happy hour. So Friday after the close, one day a month, we have some guests on, and as opposed to normal podcast format where it's just people having a conversation, 1-2 people. Here, I just open up Zoom and let anyone who's a subscriber to Kedem ask any questions they want, and we all drink a bunch of beer and have fun. And this time we're having 2 close friends of mine, Adam and Art from Segra. We want to talk about uranium, but they have a really strongly performing fund, and people can ask them about anything that is on their mind and of interest. But uranium started moving. I figured we'd get those 2 on the happy hour, just because they're kind of like leading thought leaders, or whatever you want to call them, in the uranium space. And so let the subscribers ask any questions they want on uranium.
Well, that's fascinating. Okay, so and your new headquarters, it's on the water. Which direction do you face, by the way? You were sending me pictures and showing me the view. What way is that?
West.
Oh, so you get the sunsets too?
Yeah, we get sunsets here. It's great.
You bugger.
Yeah, we're going to get a paddleboard out here, and I don't know. I'm super excited about it.
And how's your surfing coming? For those who don't know, Kuppy has decided to embrace the sport of surfing. He claims he's not very good, but he goes out every time I try to get a hold of him. He's out on the water.
I'm terrible. I'm surprised I haven't drowned yet.
And so, tell us a little bit about your evolution. What was that like? What was the most surprising part about trying to learn surfing?
Well, so I'm 41. I'm not I'm not much of an athlete. I mean, thankfully I know how to trade, because if I had to, run away from a saber-toothed tiger or something, if I'd been born, 10,000 years earlier, I'd been lunch. So anyway, I just bought myself a board, and I'm one of these figure it out on my own sort of guys.
Yeah.
It's like stocks. I figured it out, and everything else I just figure it out. So I said, I'll just figure it out. And normally you'd take some lessons, but that's not me. I just took a board out and almost drowned a couple times. I mean, I'm a decent swimmer, but it's just common sense stuff. That wasn't that common to me. And so I just kind of, point the board at a wave and hope for the best. And
so you honestly, you did no YouTube video, nothing. You just decided, I can figure this out. It's not that complicated.
Pretty much. And I just got plowed over and over again, hundreds of waves. And every time when you get plowed by a wave, it's just the wave takes the board and drags you underwater, and you can't really, breathe because you're underwater. You don't know when the wave's going to release the board and let you come back up for air. And you kind of try to flail around like a lunatic. This doesn't really help much. And I don't know. You learn how not to drown, I guess. That's the hardest part of surfing. But I've gotten better at it. I don't want to make it sound like I'm totally helpless, but I'm having a ton of fun out there.
Have you got some local friends, the 20-year-old kids that are just laughing at you that you see?
Yeah, of course.
Yeah.
I mean, there's a bunch of girls taking their first lesson, and they're better than me. They're like 12, 6, whatever. Like,
Oh yeah, the little ones are really good. Like my kids were like that. I would sit there and I used to cheat, and I used to get there in waves that were just kind of like I could stand up and I could push them to start, and they would fly because they're so light on the board and stuff. Like my problem is I'm so heavy that I need to, that it's moving the board around and stuff. All right, so you're enjoying life on the island.
yeah, one thing I want to say about surfing is that, all of us are in this hedge fund game or trading game. And, if I'm on land, I'm checking my phone every 3 minutes. And when you can't put it down without having 4 texts. And when you go out surfing, you don't think about the phone. If I go to the gym, I'll do 2 sets, 3 sets, and then I check my phone. And I have 10 missed text messages, and I have to respond to all the texts to all my friends and stay on top of it. And there's an earnings call, there's a press release, and some company I have, missed something, and then it's just you never escape. When you're out there, you can't just go back to your car and get your phone. So you're out there for 2 or 3 hours, and it's truly relaxing, and it helps reset the mind. And I didn't realize that I needed that in my life, just getting away, 4 or 5 days a week for 2 hours. I didn't realize I needed that until I started doing it. And now I want to make sure I keep doing that.
Oh, that's some great wisdom. Completely agree. I think a lot of us should take a little time away from markets and go do something else, something healthy out in the ocean. Unfortunately, not all of us are in 30 degree or 85 degree weather with the sun shining and have a beautiful place to surf like someone.
Well, that's your own mistake.
All right, Kuppy, why don't you tell people where they can find more about you, about your KDM, and the whole spiel?
Sure. You can find me at Adventures in Capitalism. Sign up. It's free. You get what you pay for. I haven't ridden much lately, but now that the office build-out's done, I intend to get back to riding. I really enjoy riding. You can go check out Kedem at kedm.com. Take a free trial. I just don't think you'll be able to trade without it. I know I can't ever go back. And then if you want to be offended, go to Twitter at HKuppy.
And, in terms of the Kedem, it just keeps getting better and better. And the fact that you have all these analysts there finding out information and stuff, it's a great product that just keeps getting better as you're adding resources to it.
Yeah, and it'll get much better on September 19th when they turn the internet on.
Oh, at the
we're all in an office right now on cell phone hotspots. But once we have actual internet, we have some big plans.
Sounds great. Kuppy, thank you for joining us as usual.
Yeah, sure thing. Happy to join.
Take care. All right, Patrick, it's time for Talking Charts. It's certainly an interesting period.
Oh, boy. All right. So let's start off with the top 3 things we were watching last week. Does the market fade sentiment? No. Number 2, we had the US dollar yen, which actually surprisingly didn't make any bigger moves. It had that huge rip. It looked like it was ready to go. And while the dollar's been strong, it has not been, in at least the last week, the US dollar yen that's been the driver of that move.
I would even suggest, Patrick, that the dollar is gone from being something that was driving everything to much more on the back burner. And I guess, though, you might argue that it's following the euro more, but it just seems to me that it used to be when the market was getting hammered, the dollar was going up. And we had a couple of times this week where the market really got crunched, and yet the dollar was up, but it wasn't up like what you'd think.
Yeah. And number 1, the inflation number. So I think that was important, wasn't it?
It was. We were discussing this with Kuppy a little bit, but I don't think there's ever been a number that I can remember, an economic number that affected the market that much.
That moved the market. That was crazy.
It was shocking. And it was shocking, Patrick, because it wasn't that far off of consensus.
Yeah, it just, the market, I think the issue, not issue, that's the wrong word. What contributed to that was the fact that the market ripped over 200 S&P points higher in the 3-4 trading sessions prior. And so it was sort of at a higher elevated spot. And all those traders that were chasing those few days of gains, it was just one big run for the exit door all at once.
I think there's a technician that highlighted that last week.
Yeah,
I think you might have said something like that.
maybe.
Good call.
Maybe.
Good call.
Yeah. Must be a smart guy. Anyway, let's talk about the top 3 things to watch next week. And what I wanted to just touch on was crude oil. Does the oil decline continue? Obviously, the SPR reserves, and does Biden buy or not buy, and what prices does he do it at, and all of these things are big issues. But like Kev, this is still a very clean downtrend. Lower highs and lower lows. And the rally kind of failed and rolled over. To me, what I was talking about with members was that we wanted to see a legitimately clear 90 on the upside to just show a sign that the bulls have a pulse. And just it was like a quick little bounce back up toward 90, and it's fading. So anyway, watching next week is whether or not that rollover that happened here follows through, because I mean that could open up for a dip below 80 if there's some more selling that's coming in here.
I'll give the bulls a little bit of ammo by saying that I'm getting more worried and less long. So it probably means we're about to rally. I gave my sacrifice to the gods.
There you go. All right. So the number 2 was post-OPEX volatility. Well, pre-OPEX volatility was certainly there. Like there was no gamma pin this week, but obviously there was a huge amount of options expiring. And certainly, at least we closed right on the 3,900 mark, where there was a huge put wall of open interest. So it'll be really interesting to see now that the market has this behind it as we get into next week, whether or not there's another wave of downside volatility. I mean, we wanted to talk about this a little bit in terms of just how much negative sentiment there is out there.
Before we do that, let's go back to this OPEX situation.
Yeah.
I'll just highlight that Charlie McElligott, who we haven't had on our show. I know him a little bit. You've had him on that other one that you cheat with me on.
Yeah.
He wrote a great piece this morning. He talks about how I'll just read it verbatim instead of trying to summarize it. Floor is citing a pretty massive moo, which is market on open, imbalance of $6 billion for sale ahead of the SPX settlement, which is leading this last dump lower. The SPX 3,900 puts expiring on this morning's settlement definitely is part of the blame on the moo. That was the 50 delta option last night. If you were short that 50 delta, you're going to have some baskets to sell as it firmly goes in the money. As of this moment, there appears to not be one buy imbalance in the S&P spiders. Never saw that into a negative gamma environment. Doesn't mean that we stay at the lows or close at the lows, but means intraday volatility could be very high. I thought that was interesting because it really was a big, huge market on open sale. And I don't know, Patrick, do you think that might have been a little bit of a short-term bottom?
Okay. 3,900 and the I'm not going to say what I usually say when a market dips to a little bit of a temporary lower low. We have a name for that.
You can say it.
Yeah, did it turtle head below the that low from the other week. And it's an important thing because 3,900 is also where there's a Fibonacci zone. And arguably, if we come into next week and we haven't legitimately closed below 3,900 and the bulls save this by going north of 4,000 within the first couple of trading sessions next week, maybe the bulls can save it. But the market has been persistently making lower highs, lower lows, below all its moving averages. Every rally's being faded. So speculating that a bottom is in just on sentiment alone is a pretty bold call. I think you have to still respect that the primary trend and the negative price action until there's at least a pulse. I mean, we've had this debate. I mean, you're far more inclined to be aggressively positioning against the trend, but I tend to rather be just a slightly late to a turn and know that there's actually a legitimate chance we're on the other side of a move.
Yeah,
To
that's
me,
why you have a lot more fingers than me.
yeah, and to me, it's a little early. We have to see, but I'll tell you what the bulls on Monday and Tuesday, they need to come out of the gate and clear 4,000 on the upside with a little bit of gusto to have a chance. If we come in Monday and 20, 30, 40 point S&P rallies and it's fading by within an hour, it could get ugly.
Can I ask you a question? I always like to know about the Japanese candlesticks. That looks like it's a flying doji or something like that. What is
doji? Yeah.
Oh, doji.
Doji candle. It's where the open and the close are pretty much equal, and it leaves a big shadow that represents the intraday trading.
Did I get that right?
Yeah,
right.
Yeah, you did. It's you
That's
did.
Impressive.
And
I didn't say it right, but I got it right.
You got it right. But the thing is that they do tend to happen at turn points, and the reversal did obviously had that quick break in the morning, but the reversal has gotten back to 3,900. I still think that it needs think of it, if Monday we came in with a 70 point up day, and we're going to give it a legitimate shot on the 4,000 on the upside, then that legitimizes that doji candle more, because then it's actually a reversal point, and it's just early to get excited about it.
Okay. I like saying it, even though I say it wrong. Okay, what's the number one thing we're watching?
I don't know, because I get the names wrong. You get the patterns wrong.
Well, I for sure.
Next week, the FOMC, buddy. Number one thing to watch.
It's going to be a fun one.
So, I mean, there's a lot of it was a lot of buzz as to whether there's going to be 100 basis points, but I mean, it's still pretty consensus that they're going 75, right?
Oh yeah. I know there's talk about it, but Nick, it looks to me like Nick at Wall Street Journal has signaled the 75. And given this the big, huge surprise with FedEx and the ongoing weakness in the economic numbers in everything except inflation, I'd be shocked if they went 100. I almost think there's more of a chance that they go 50 than 100.
Really?
I don't think they're going to go 50, but I think there's more of a chance that they go 50 because something bad happens.
I don't think that the Fed needs to do any more shocking. They have a path that they've kind of advertised.
Yeah, and listen, the 75 is already shocking. They don't need to go 100. Yeah, 100%,
yeah, but but now you scare everyone with 100. 75 seems normal.
Yeah. Listen,
I remember a year ago. Remember a year ago when it was a big deal to even suggest that they go 50.
Oh yeah.
Well, but now it's like 75. That's it.
Yeah. I think the other thing that's amazing is, remember a couple of years ago, people could never imagine any inflation at all.
Oh, I don't know who's in that camp.
Okay, what are we looking here? You got some charts.
Let's just have a quickly go. I mean, look, I wanted to just touch on this dollar. And then while the dollar index has not made that punch, that's obviously because the euro has flatlined at parity. I actually did not expect this to happen. I mean, we're going slowly on a month of parity being more or less traded within 100 pips in either direction in a very flat line consolidation. And my speculation continued to be that we could have a quick drop down to like 97 cents and just kind of clean everything up. And that could be where we see a short-term low on the euro. But so far, you got to give they've dug in. The parity's holding. And I think whether the next out of this sideways trade range, the next move in the euro is going to decide a lot. And the dollar strength throughout the entire year and the euro weakness subsequently has been one of the single biggest macro catalysts that has driven so many cross currencies, asset classes, just every element. And if inevitably we have a short to intermediate swing high in the dollar, forget about trying to make that big epic call on the super big picture. But if we saw the high of the dollar come in, let's say for the year, it could drive all sorts of things. It could be the bottom of gold. It could be so many different things could start to move, and it could alleviate a lot of the very negative sentiment and all of this risk off kind of thing that's going on in the market. We could see suddenly everything kind of calm right down.
Well, from your lips to God's ears, Patrick.
It's will the euro hold the line at parity is a thing to watch. The interesting thing is the CAD. Actually, let me put it on the USD CAD before you give me shit. But we had the breakout of the US dollar against the Canadian dollar here. And what was interesting, at least if you looked at a relative performance, if we, let's say, overlapped all the major cross currencies to the dollar, Canadian dollar has been the most resilient of the cross currencies. And finally, it seems to be breaking. And it's almost like catching up now to the weakness that's been in so many other places. What's your kind of take on the Canadian dollar here?
I think the Canadian dollar has two things going against it that are going to be really difficult for it to rally. One being the fact that our real estate is screwed. I don't know what to say. I was going to say something worse, but it's in trouble. We're up a long way. There's a lot of debt in the system. It's going to be difficult for it to do well. It's an important part of our economy. We have a Bank of Canada governor that seems to intent on doing the same as Powell. So we're in essence just
but inflation is there in Canada the same way it is.
But I would argue that Powell is not looking at forward-looking inflation, is staring at reverse know. He was late to realizing inflation was there. He ignored forward-looking inflation on the way up, and he's ignoring forward-looking inflation on the way down. So, but back to Canada, and then to top it all off, back to your thing about the oil. We're a petrocurrency, and oil looks like it's for sale, and it's continuing to chug lower. So all these things finally just weighed on the Canadian dollar, and it's gone offered. That's the end result. I
have to say, though, I'm not as negative on oil as you are. I
just don't know if it's going up anytime soon.
Thank you. That is actually the bigger issue for me, which is that, like, to me, it might be on the 8th inning of its decline, right? Like there may not be that much more downside, but the real money question is, when has the new uptrend begun? And that's where the money is made, and it's just hard to see that anyway. But listen.
So for me, just one second, just to be clear about oil, there's a lot of commodities that I like, and I think they're just better value. Like I'd rather own copper down at down here than oil. I'd rather own silver than oil. And it's not that I'm thinking oil is going back to $50 or $40. I just think that there's better things to own, and that chances are that global economies will continue to I don't know, not stagnate. It's the wrong word. Just kind of be moribund and just not go anywhere. And I don't know. It just feels like there's better things to own. I could be wrong.
Oh yeah. I wanted to touch on gold here, and what was interesting is gold did break to a lower low. It broke a major support line along the 1680 level, which through 2001 and 2002 acted as a major support, because there's no such thing as a double, triple, or quadruple bottom, right? That's right. It just keeps going until it finally breaks. And so here it is, fifth time's the charm. But it did break down on there. But I've been highlighting that, gold has truly been this year thematically simply behaving as a cross currency to the dollar. And if you go back and look at the last 3-4 years, obviously things like real yields and other things were such huge focal points for short-term trends of gold. But really that seems to have completely all decoupled. And the only thing that seems to be mattering is whether the dollar's going up or down to kind of give as to whether gold should be traded. Are you going to push back on that, or do you agree with that?
No, I agree. The only thing I'll say about gold is I think there's better things to own as well apart from gold. Like I'd rather own silver. Go look at.
Well, okay. That's where I was going with this.
Okay.
Isn't it interesting that silver held up like a champ? Like gold had its face ripped off. Normally, silver will echo gold's move as its little cousin. And silver dug in there.
Yeah.
Like people are buying.
Listen, one of my favorite guys on Twitter, Contrarian 88888, he's been touting silver for a long time. He was early on BTU and the coal stocks. He's been a big silver bull. Another one of my readers, Sam, he highlighted the fact that if you go look at the commercials are net long silver for the first time. Managed money is super short silver. Lots of things to me seem to be lining up for silver. I think it was Bruce Kovner. He says something that I like to look for is when a narrative doesn't confirm price action, meaning that silver's going up even though it should be going down for all the reasons, and yet it's not. And yeah. I think that the surprises could be on the upside from silver. It's turned into my one that I'm liking to play.
Yeah. Well, I was going to point out that if you look at the chart on platinum, it looks the same as silver.
Yeah, there you go.
Like and even if you look at palladium, palladium kind of based out. I mean, obviously it had its little Eiffel Tower formation. Went from $3,400 highs down to $1,700, basically a halving, and it kind of bottomed in June. Hasn't made lower lows. Rounding bottoms, cup and handles, whatever technical pattern, geometric shape you want to jam on this, but it's basing here. And so kind of gold broke to a lower low, but a lot of the other precious metals seem to be kind of marching to the beat of their own drum and not giving a shit.
There you go. Put away the gold, go trade the platinum, the palladium, and the silver.
There you go. All right. Well, you know what? Was there any other thing that you wanted to highlight that you? Oh, by the way, I was just gonna say, like, bonds. Like I've been a little bit more neutral to even. I speculate a little bit on the upside of bonds, and you've been straight out bearish bonds, and right. Kudos to you on the thing. But isn't it What I'm trying to kind of put my finger on with this drop in the 10-year and 30-year bonds, the way they're going, they're heading down to a previous low. Traditionally, that would be where you would see double bottoms or at least a bounce, a reaction of some sort that would simply acknowledge that this is a previous higher low, and traders, just reflexively respond, even if it's temporary. There is not even a pulse of a reaction on treasury bonds as they're approaching that previous low.
Because they're a terrible instrument.
Stop it with your bias. Let's just talk technically for a moment.
Okay, I don't know. I don't know.
All. It's just, to me, the fact that we bled in a slow bleed all the way down and not even a reaction. I don't know what to make of it. It's not the typical way that you would see the price action go down here. It really kind of makes me ask the question whether there is still a lower low to be had here. Like, if I would have bought the dip over the last couple of days just to try, my confidence is waning very quickly that there's going to be a reaction. It's stay bearish if you like it.
Okay. I guess if you want to look at a chart, I'll let you finish this. I
was just going to say investment grades broke to a lower low, and junk remains weak. And I think that the interesting part here, Kev, I'm personally, I can't imagine a scenario where junk bonds break to a fresh new 52-week low and are heading lower and equities don't give a shit. I honestly think that if we see high yield start to break, it's like a canary in the coal mine that there's still another leg in the S&P coming.
I was thinking about this the other day, Patrick, and I think that's a great point because I was thinking, oh, you know what? Spreads are still tight. And so like pull up LQDH, which shows you spreads, and they're hanging in there. They're not really widening, meaning that this decline in LQD is the function of rates going up as opposed to credit going down. And I was thinking to myself, oh, well, that's okay. But then I thought, doesn't there reach a point where it doesn't matter whether it's because credit widens or just rates are, duration is caused it to go down? Eventually, we're going to get to a point where an equity investor is going to sit there and go, why am I struggling to try to make, whatever it is I want to make in the S&P 500 when I can go buy this corporate bond yielding whatever X percent? And there's going to, I got to think that we're going to start getting some substitution, Patrick. I guess I'm kind of saying that I'm in your boat, that as this LQD, which is good quality, investment grade bonds continue going down, eventually that has to drag down the stock market, whether it's going down because of credit spreads widening or whether it's going down because rates are going up. It doesn't, I don't know if it matters, is my point.
Yeah. The last thing I wanted to just have a quick look at is Tesla. And while, I love to shit on Musk, and I would never own the stock, but this thing has been resilient.
Yeah, I really
resilient.
Agree.
Like, and the way it's worked its way back up here, in spite of the stock market having its face ripped off, it's setting up for a breakout. If Tesla clears 310 here, and especially if the whole stock market holds 3,900 on the S&P, does Musk ride this thing right back up to those March highs? Like, I'm baffled by this, but it is.
Well, he is the world's smartest man that's ever lived, so it actually doesn't surprise me in the least.
All right, one last chart. What do you want to look at?
I want to look at FedEx, baby.
Oh yeah.
So FedEx.
Boom.
This move was the largest decline in the last 40 years. One-day percentage decline. It was larger than the 1987 crash.
For FedEx.
For FedEx, obviously, yeah. I'm not talking about the stock market. I'm just talking FedEx.
Yeah.
Isn't that fascinating? Like, this was a big move out of the blue.
You know what? I think what it is that just that announcement that the world's going into a huge slowdown. Did they say recession or slowdown?
No, I think the FedEx fellow said slowdown. Recession.
He did say recession.
And then Jim Cramer just got out there and shit all over it. So
the point though is that I think that it was so emotionally damaging to the psyche of bulls that they kind of almost punished the stock unnecessarily worse because it just kind of they shot on their bull party. It's
Patrick, I will agree with you, and I will say,
are you going to fade it?
No, I'm not touching that name. I don't know. If you made me go long or short, I'm obviously going long. But I will say this week to me felt like the last of the economic bulls gave up. The people, or let's not even call them economic bulls. Let's describe them as soft landing hopefuls.
Okay. That's a good
and I really feel like this was the week where the last of the soft landing hopefuls just said, "That's it, I'm out."
Fuck it, it's going down.
Yeah, and at
least the economy.
At the very least, they're just like, I just think I'm getting back to bench. I'm gonna take the risk off. So that's where I think that this is different. A lot of
Have
times
you-
people think that like it means they're actively short. It doesn't necessarily mean they're actively short. It just means that a lot of people are not taking any bets.
Have you seen anyone kind of putting out some sort of quant stuff on midterm elections and like what is a typical response? Like now that we're like literally a stone's throw away from this, like is it possible like that the market kind of like flatlines the elections, or do the midterm elections have a trend that typically emerges during
Well, I
them?
don't know about going into the midterm elections. I haven't seen anything on that. I do know, and I wrote a piece about this 4 years ago. When it dusted off, probably write it again. I don't think there's been a midterm election in the last 60 years that hasn't finished up on the year. Like if you take November, whatever the midterm election is for the next year, it's been up each and every year. I know that sounds
Wow.
crazy, but like I remember writing it and doing it, and it was crazy. And I went and like, nah, that can't be. That's bullshit. And I went through and I sure enough, the one that was close was 87, but it managed to. I don't know how it. I guess it rallied back up in time.
Yeah,
Like,
You know what? No. Okay. Let me. Let's throw out a hypothetical theory, because one of my favorite little thought exercises I like to do is I always like to think, what could the market do to screw over the maximum amount of participants, and use that then as a base case for kind of stress testing a scenario. And my thought would be, what could screw over the absolute maximum amount of people would be a rally into year end that suddenly convinces everybody that the bear market is somehow over. And then when the Fed finally does break something, that we have the next leg of a bear market in 2023, but the rest of this year ends up on up. Like, wouldn't that be an interesting scenario that would just screw over the maximum amount of participants?
it might, but then that would also screw over the midterm election cycle, which I went and found it. If you actually were interested in seeing it, I think this was when my letter was free. So you can go just Google midterm election and then the macro tours, put it as one word, and you can see it. There's like a rolling GIF of all the different years. And every year, I'll read it to you. Since World War II, there has not been a down period for the S&P 500 in the 12 months following the midterm election.
Really?
That's fast.
But you know what? Those are dangerous when something happens so consistently, and then you're absolutely sure because of that it will repeat is when it doesn't, right?
Well, the other thing is, now that I'm thinking about this, I wrote this on November 5th, 2018. Can you pull up your chart and tell me if from November 5th, 2018 to November 5th, 2019, we were up? Can we just confirm this? Can you go back to your charts?
Yeah.
November 5th, I think that's going to be an up period, but I'm not 100% positive. So November 5th, 2018 to November 5th.
November. There it is. Okay.
And then go 1 year out. Oh yeah,
so-
that's going to be up.
Yeah.
So
Come on, into the end of the year though, it had its face ripped off.
yes, but listen, there's lots of times that it was like that. But the next year, the 12 months following the midterms, the 12 months,
It's
it's never been down since World
But
War
Kev, okay, so but the thing is, okay, this was back then a drop of 17%. Okay, so like think about it. If the S&P here goes and slams into year end down to 3,000 and hits every macro Yahoo's 3,000 target that's out there, and then reverses and ends up on the year, are you going to be doing a victory lap? Like ultimately, I think that there are so many people out there that are calling for 3,000 that if it went to 3,000 and then rallied, all of them would claim to have been right.
Yeah, of course. And actually, didn't you want to talk about this? Didn't you want to talk about all the bears claiming that they're right?
Yeah. So
because this is one of the things that my big pet peeve is that I look at the action of the since this summer, and I say the S&P's gone nowhere. So everyone will sit there and the bears feel like they're right, and I'm like, it's still to be determined. They might be right. I'm not saying they're wrong. I'm just saying that the action of the last 3-4 months is still up in the air. We're
arguably right now, if you look from May till present, right, and you kind of sum this up as almost a 5-month period, more or less, we've swung 300 points up and 300 points down,
right,
and we're flat on that sample of 4 months, right?
And that's really what I'm saying, because I don't think, if you ask most people over the last 3 months, or 3-4 months, are we up or down? Everyone would choose down.
The thing is that most people are either or often people are margined or burning theta. There's all sorts of things. So what happens is when a market trades sideways, it can sometimes be still very painful.
Oh, I'm not disagreeing.
And so the thing is that negative sentiment could just simply be reflective of the fact that people are just being emotionally chewed up.
Oh, I think that's a great insight, Patrick, and I completely agree. I feel like even though we're unchanged, the emotional ups and downs of the last few months have been high. And the other thing I would say, Patrick, is that the S&P is unchanged. We can't say the same for our little bond market friends.
Oh yeah, but that's what though,
but if you're
retail and the Twitter sphere are not heavy bond.
No, but they're still, to be fair, Patrick, if you're sitting there and you're you're looking at your global allocation or your balanced portfolio, you're still getting crushed. So even though the last 3 or 4 months has been unchanged in the S&P 500, you can't say the same for your balance fund.
Yeah.
Your balance fund continues to bleed. And I think that's part of it as well. And you might argue that the other thing is that during this period you had lots of inflation. So in real terms, you hurt. I'm sympathetic to that. But last I checked, the bears aren't, shorting in real terms. They're shorting in nominal terms.
Yeah.
And it's unchanged. And so I'm not saying they're wrong. I just think that given their level of enthusiasm, I would have thought we would be pushing to new lows and the charts would look truly terrible. Like US dollar bulls, they have lots to be, excited about, and they can.
Well, not for the last 3 weeks, but definitely.
But they can rightfully say that trend has continued.
Yeah.
And if we go back 3 months on the US dollar, it was a lot lower, and that trend has continued.
Yeah.
But I just don't see it yet on the stock market. Now watch, we're going to have a 1987 style crash. And all the bears are going to send me notes saying, see, I told you. It could be. I'm not going to argue that can't happen. I'm just saying right now as we speak, it's still up in the air.
Yeah. All right. That's enough for talking charts. Let's move on, buddy.
Okay.
Time for skin in the game. And I was destined to win this one because I bet so soft.
I know. You were soft. That's a good word for it. You were soft. You got me on an emotional part of it, like the steepener. I love the steepener. And then I shot my mouth off and went 10 bid, told you to choose the price, and you got scared by it. I liar pokered you.
Yeah, you totally did. You know what? But the thing is, you know what? It's the psychology of it, because I was down and I didn't. If you took another 10-point leap on me, I would feel so demoralized on winning this entire little race.
Exactly. It's just like if John Goodfriend had lost the $6 million.
Exactly.
Yeah. No, I get it. That's why I did it. That's why I went 10 bid.
Yeah. Take your credit, but anyway. So let's tell everyone. So we bet on the 530s over under. Obviously,
I
started.
I couldn't have lost by. It couldn't have gone more ugly for me.
Yeah. It just you just got murdered. Anyway, I'm back. Okay, I can see. I'm butchering it by just saying this.
I'm
but
back, baby.
you know,
No, you
I'm
are.
within. I'm within a stone's throw of catching you. So
There we go.
let's
Just think
stay.
1 second. 1 second. If you had bet 10,
Oh, stop it! Don't
you would
don't.
be up. I hear Lena. giggling.
You're
That's awesome.
exactly like you're totally mind fucking me. Thank you, bud. I appreciate this. All right, so let's work on
second.
your.
Sorry, go ahead.
Let's. I'm gonna make the bet this week.
Can I just tell the people about the game first?
Okay. Go
Okay.
ahead.
Skin in the Game is our weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Each week, one of us presents a wager. The other guy chooses which side of the bet he wants. Every wager needs to settle by next episode. And we're going to play a match to 50 points. The loser of the match will take out 3 lucky or unlucky, depending on how you think about things, Market Huddle listeners for dinner where they can grill him about why he had so many bad calls. Each week, Patrick and Kevin will be able to bet anywhere from 1 to 10 points on each wager. Once someone hits that 50, they will win the match, and the loser needs to start figuring out restaurant reservations. Lena's going to pick the 3 Market Huddle listeners, and yada, yada, yada. Let's get going. What do you got for us?
I'm gonna go and bring some emotion into this for you.
Oh, you're going to do Tesla, aren't you?
No,
Oh.
10-year treasuries.
Oh, God. Okay.
This is going to be a double bottom or not, buddy? This is literally testing its previous low almost to the tick. And so the question is, does it break to a lower low? Actually, no, break. Because that's too easy of a trade. Does it close above or below that June low?
See, you're not going to like this because I'm going to bet up. Because I think the economy is going for a little bit of a soft patch. And even though I don't like it, even though I want it, I want bonds to go lower, I'm going to pick up.
Wow. All right. Well, what do you want to bet?
I can't. I'm not going to be an asshole, and because I don't want to bet large on bonds going up. So you're down by 6. I want to stay ahead. Listen. I'll do up to 5. I'll do anywhere from 1 to 5. You pick.
Nah, I think it's going to bounce to. I'm going to keep it simple with a 3.
Okay, fair enough.
It's if it was, I was really hoping you were going to. Okay,
I'm not going to do it.
Yeah, you saw it coming. You saw what I was looking for. You took the other side. I get it. All right. Well,
so
listen,
we're going to do a 3. We're going to do a 3.
So Lena, the 10-year bond.
So safe.
Yeah. It's all 3s. It's boring. That's why we had to change it from 100 to 50 because Patrick will never be on his side.
Well, no, if it was 100, I'd be a little more aggressive. This is like you jump 10 points here. You're literally 1 or 2 bets away from winning it all.
Okay, time for no stupid questions. Lena, hop on and tell us what we're answering this week.
All right. So first question here. Founders of the Market Huddle. That includes you, Lena. Thank you.
Of course it does.
Terrific show. You should play the old Wall Street Week theme music to open the show because the Market Huddle is the modern version of that classic.
Louis Rukeyser is rolling over in his grave when he hears that. I better check that he's dead. 1 second.
Oh.
If I just, I'm pretty sure. Not that I want him to be. It's just 2006.
Okay.
I just don't want to be making someone dead that's not.
Yeah.
Okay.
I have a question for Patrick, the chart soothsayer, the Oracle of Canada, the Squiggles seer, the Crayola clairvoyant.
Oh, that is good. Ooh. That's going in the openings from now on.
A few weeks ago, while divining on the gold chart, Patrick said that he didn't see a higher move in gold until Q4. Why? Yours, trading in Tennessee.
Oh, I like it.
Well, there's 2 elements. One, the dollar is obviously inevitably going to have some sort of an intermediate high, irrespective if the bigger secular trend continues. And second is there's a seasonality typically toward that. I mean, I also like to look at like cycle lengths, and I mean this gold sell-off is slowly approaching that kind of half-year mark in length, which is typically an average duration of at least a cycle downturn. There's a lot of things lining up that at some point, look, we could still be down going into early October. There's no certainty of a short-term low today or next week, but going into that fourth quarter, there's a very good chance that there's going to be a counter trend rally, and I'll stick by that call.
The Oracle has spoken.
All right. And Kev has nothing to say about it.
Well, it was asked to Patrick, so I have nothing to add.
That
He felt left
awkward
out.
silence. I was looking for validation to see.
Oh, I'm sorry. You know what? Now you know how I feel every day of the week.
All right, let's go to the next one.
Okay, love this show and listen religiously. My question is about trying to capture dividend growth. If you are looking at the growth of a company's dividend, not the underlying stock price, but just whether and how much the company's dividends are growing, how difficult is this to capture and how to do it? How difficult is this to do at a retail? There's a couple of letters missing here. I think this listener might be drinking lots of beer. Is it actually worth trying to do? One other suggestion is I enjoy hearing your guests discuss their favorite investment books, but I usually forget them later on. Perhaps you could start a Market Huddle library with a list of these books so I can go back and revisit them.
You know,
Nice.
if there's any Market Huddle listeners that want to make the library, we're all for it.
We can barely get our words out. What are you talking about?
We'll retweet it and make sure everyone knows that list. Patrick, when do you want to do this one? 2 in a row?
Look, this is not my forte in terms of like obviously, you know, there's a whole series of those investors that focus on drips and long-term investing and reinvesting of dividends, and they're looking for trends of dividend growth. Look, that's like hardcore long-term fundamental kind of investing. It's not that I don't believe in it. It's just not my style. Like, I'm a trader, and so I don't know if I can necessarily add that much value. What I do know is that like while you can anchor off of the trends of dividend growth, I mean the market cycles are still incredibly volatile, right? It's just because but I mean, usually it's a really good company if it can keep its dividends growing on a sustained basis, right? What's your take?
And like there's the dividend aristocrats. No, it's not cats. Aristocrats. Like the cats. Aristocrats was the Disney movie, the Disney movie from when we were 8 or whatever. And that whole strategy is what this listener is talking about in terms of finding stocks that have consistent growing dividends. And if you look over time, that strategy's worked really well. And when the listeners,
but it's not it's an investment approach almost.
Yes, it's not a trading. It's an investment approach, and exactly that. And the question is, should the listener go and investigate it and pursue this? Absolutely. I think that there's a lot.
If you want to be a long-term investor.
Yeah. Like exactly, but if you're interested in it, and you like our question is, is this a viable investing strategy, and is there an edge? I believe there is, and I believe that there's a lot of times those companies do offer superior long-term growth.
That's the key. Is it's long-term because, like for instance, in this period where these FANGs and tech. And
you're going to underperform.
There's an underperform period, and it makes you second guess your entire approach. But when you really look at what, and especially, rarely do they account for the compounding of your reinvestment plan. So if you're taking those dividends and using it to buy more shares, you're actually creating a compound in your return that sometimes is not easily reflected by just studying the movement of the stock prices themselves, right?
Patrick, this is like a throwback to how stock investing used to be.
Yeah.
40 years ago, 30, 40 years ago, people used to buy stocks for the actual dividends and hold them. And
what losers, right? Like, honestly,
they don't understand that GameStop's going to the moon, baby. Okay, last question.
Last question here. Hi, guys. Regarding contrarian plays, what is your opinion on FinTwit as a sentiment gauge? Obviously, it depends on who one follows on FinTwit, but do you think it gives a good market sentiment overall, or should I just use CNBC?
Patrick,
please,
you chose this one on purpose, didn't you?
Yes.
Like, okay, I'm gonna get Kevin in trouble.
No, it's not CNBC. It's just Jim Cramer. Okay, go.
Listen, I'm trying to think of how to say this. The trouble about using FinTwit as a pure sentiment gauge is that sentiment gauges in themselves are difficult because there's times that the crowd is right. And Patrick, you drill this into me in my head all the time, and it doesn't seem like I ever learn. But just because people agree with me at times doesn't mean I have to take the position off. So can you use FinTwit as a guide for sentiment? Of course. But you can also use it. Okay, let me try it again. Let me start again, Patrick. I'll say this about this. I know somebody that purposely goes and tweets stuff out, and this isn't me, tweets stuff out, and if they get tons of pushback, they double the position. Because they use it as a sentiment gauge, and oftentimes it shows how it is. But listen, that's a very, very difficult thing to do. Trading against sentiment is tough, and I think that this would be a perfect example. We have been oversold, and sentiment has been just terrible for the past month. And we just keep going lower and lower and lower. And all you have to do is look at, how many doomers are on, the doom porn on FinTwit, and you would think that everybody is short and cheering. And it does feel that way when you get on there. And yet it hasn't helped you. We're going lower. So I guess my answer to your question is, can you use FinTwit as a sentiment gauge? Yes, but that doesn't mean that it's going to be a good trading strategy.
What I like is the word when he says gauge, because I also have this view about sentiment, but I look at sentiment as I have a checkbox of criteria of things I look for that could be conditions that could be there when a stock or a market can meaningfully turn. Right? And so when you have really negative sentiment and the market washes out, that's a pretty good condition for a counter trend rally to emerge, right? And so I use it as an input variable to size up where we are in the market cycle and how much reflexive energy the market could have to go the other way. But I don't actually make a trading decision based on the sentiment alone. I need something to kind of really spur me on that this is the turn point, and whether it's a really thick crayon or something that to help me make a further decision. But it's I just need more than the sentiment, but it's a really important kind of way to size up where the market's at.
Yeah, I think that's a great way of explaining it.
Yeah. All right. Lena.
If you have any questions for Kevin and Patrick, please submit your questions to nostupidquestions@markethuddle.com.
All right, folks, thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow on Twitter at the Market Huddle. We're there every day. Lena gets tired of talking to Patrick and myself. Patrick, where can they find you?
You can find me on Twitter at Patrick Ceresna or at bigpicturetrading.com. And Kev, where can they find you, buddy?
I'm on Twitter at Kevin Muir. You can check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. Now stick around for the after show. All right. Patrick,
another one in the bag.
You got to do your Russian beer.
You know what?
You know what I was thinking about, though, while you were telling me? You're saying it's actually Spanish and it's not really Russian. There's, on the corner of Yorkville and Avenue, there's a spot, and it's been taken over by a steakhouse. And my wife was telling me that it used to be the Russian tea room.
Oh.
And I was like, oh, that's an unfortunate name change decision. Like I'm assuming it wasn't run by oligarchs. At which point I would.
This beer is as Russian as a Moscow Mule. You know, like in the end, it's a name of a type of a stout. So, but I'm gonna rate it, and I don't know. Like it's so average. Like I'm gonna give it a 7.4. Like for a stout. It is not. It is right down the center.
I think you should be giving 5s. If it's average, it should be a 5.
Okay. Don't start changing. We score between 5 to 10. We reserve scores under 5.
I used
for
to do
when it's outright.
I used to do lots of 2s and.
Jesus! No,
mostly on sours. So to be fair,
exactly. It was your
prejudice.
Expressing. No, it was you expressing the fact that you reject this type of beer in its entirety. It shouldn't exist. What is this abomination that has been created? Like, you
know me too well, pal. You know me too well.
Listen, I with the fact that we typically score between 5 to 10 for majority of them.
So
I
then
look at
that's your
7.5.
Okay.
And 7.4 is like it's right. I'm gonna give it a little bit less. It's the name bias. No, just kidding.
It is Russian after all.
I had to give it that 0.1 down. No, but it's definitely drinkable. I would definitely order it, but it's not something that I'm gonna be like, you got to try this beer. All right. Anyway, that's all I got.
Okay, so let's the first topic.
First of all. I got a topic.
Oh, you got a topic?
How do I fuck up Kuppy's name every single show?
I don't know.
I thought you were doing that on purpose for a while.
Oh yeah, that's it. I did it on purpose. Thanks for saving my ego here. Like it's
okay. I think I've done the flying doji. Which one is it?
Dodgy candle. Doji.
I think I've done it each and every time, so it's all right. It's just like a mental block. It's not like you're friends with the guy.
Listen, we're gonna have Kupperman back on the show in no time.
We'll just get him to change his spelling instead. Probably easier.
No, it's just you know what? He's very much like Leon. So you're just like, oh, you know what? Leon Kupperman, Harris Kupperman, they're the same guy.
I don't know why. It's like I get it.
No, I know you do.
But you know what? It's
and then I know we're mean and we always leave it in and we won't let you edit it.
No, that's okay. That's okay. You know what? I deserve the public shaming. Yeah. Like I deserve a flogging. I'm.
That's all right. It makes it fun. It makes you more lovable. Like if you're one of those guys that has perfect and makes it perfect. Podcast and then makes the editor work really late into the night so that he never has any errors. You wouldn't want to be like that. Oh God. Okay, so let's go on to the topic that I want to talk about. We were discussing this briefly before the show, and we got to get back to it. The Island Boys. What's happened to them? Okay, and it would be a real shame if somebody took Patrick in my face and put it on the Island Boys and tweeted it out.
Oh, I can't wait. We should just have a contest.
But listen, we do have to wonder what happened to them. I'm a little worried about them. They might have been paid in crypto, so they might still be long, and they might have that they weren't long. They might have smoked.
But what is crazy is that for all the crypto shit,
yeah.
On YouTube, they still are musical artists.
Oh, that's what they call themselves?
Yeah. Did you ever hear them sing?
Yeah. Island Boys.
Oh,
yeah.
It's
pretty.
It's
bad.
like a sweet symphony. It's
Oh my goodness.
Really surprised they haven't been picked up by anyone yet. Really shocked. Like a big label. Maybe they're in negotiations with the big label, and that's why.
Maybe they got arrested for something, and that's why we haven't seen them.
I do see that they're having a former representative for the brothers accused them of owing him 150 grand. So they've stiffed one of their representatives, quote unquote. I don't know what a representative is for the Island Boys, but I don't know. Oh, here we go. I didn't realize this. Here, I'm going to quote. This is what he said. When I was locked up, now I'm hoping that's COVID and not jail, but you never know. I had a lot of people were trying to be rappers. So I'm like, fuck it. I'm going to dive into the game, Alex said. The only thing that's good for me is Robin, which is not good or rapping. Oh, so that was probably jail. Okay. You know what? Then I applaud his new decision about life. You know. Lena, have you watched anything good lately?
I actually watched a movie this week, and I was actually very impressed by it. I watched Elvis.
Oh, you liked it, eh?
Yeah.
My wife liked it. I'm convinced it's this might be sexist, but I wonder how that skews that guy's movies.
I mean, it's about Elvis, so that's
No, I get it. But
you know.
what's the director? Because my wife
Baz
loves
Luhrmann. He did like Romeo and Juliet, Moulin Rouge.
Yeah. Because I didn't like it, and I like Elvis, and I didn't like the movie.
Oh, I thought it was great.
You did, eh?
Yeah.
I don't really get it. I don't understand it. Let's check the tomatoes.
Yeah.
I was telling the guys at work about the tomatoes. They were doubting me, and then we went through them all, and they had trouble coming up with one that didn't work. So I was like, I think Patrick had one that didn't work, right? It was a bad tomato reading.
No, I was bang on. It was one of you guys that messed it up.
94 tomatoes. So you know what, Lena? You are not alone.
Yeah, it was good.
I think people are just it's Elvis, so like you can't shit on Elvis. I think it's a.
You're a big Elvis fan?
Well, I mean, he's got a couple good songs. Yes.
Yeah, I like Elvis too.
I thought the actor did a great job.
No, I did too. The young kid from Disney or whatever.
I don't even know where he's from. I don't even know his name.
I think he's like a Disney star that has finally made the bigs.
Oh, I see. Yeah, I thought he did a great job.
I guess I just don't like those movies.
It is I think you kind of have to be also into a bit of like musical kind of.
But see, that's the thing. My wife hates musicals.
I don't like musicals either, but I like his movies. It's strange.
So you're the same way. I'm convinced. I don't know. But you know what? 94, that can't be a male-female thing. People must like it.
Or if it's just a lot of women writing in. It's like, oh, this movie was great. You have to go watch it.
Yeah, we were going through trying to figure out like if there was anything mispriced. Patrick, give me your favorite movie.
Don't put me on the spot like this.
Okay, Lena, give me your favorite movie.
Oh, geez. Wolf of Wall Street.
Really?
Or let's say,
awesome.
let's do an older movie. Fight Club.
Okay, well, let's say.
Oh my God, I
Wolf of
agree
Wall
with
Street.
both our picks. I agree with both our picks.
Oh, only 83 for Wolf of Wall Street. Ah, that's interesting.
Yeah,
Fight
that is
Club.
interesting.
Fight Club. Let's go have a look at this. Fight Club, 1999. You're just a pup up there, if you were born at all. 96.
My girlfriends and I used to, in high school, every Valentine's Day, because we didn't have boyfriends, we would just get a tub of ice cream, get chicken wings, and watch Fight Club.
What?
Yeah, that's what we did.
That's insane.
Would you eat the ice cream and the chicken wings at the same time?
I think it was just on rotation between the four of us. We were just passing along,
pass
just
the bucket
watching.
around?
Yeah, watching, Brad Pitt and Edward Norton.
Oh my God.
Topless Brad
That
Pitt.
is awesome.
What's not to like?
That is.
I would have never guessed that. That is like.
So we were talking
Wow.
about this, Patrick. I have a question for you. Tell me the last time you ordered a big bucket of Kentucky Fried, and when your partner eats one piece and then you eat the other 19 pieces.
like never. But
You've
but
never
actually
eaten a whole bucket
no.
of
But you
Kentucky
know what?
Fried?
There was this place on Keel and Bloor called Mugshots, and they used to do the bucket of chicken as well, and
Yeah.
they had way better fried chicken, and so there
What is
it
this
would
place
be
called?
one of
I gotta
those.
look it up.
Mugshots
Yeah.
Tavern, 1729 Bloor.
Yeah. They have fantastic bucket of chicken, and I would done that where it's like you order a bucket of chicken and you basically eat it for the whole week.
You told me you brought me here. I've been to Mugshots.
Yeah.
You guys didn't get bucket of chicken?
No, you know what? That was the place though. Patrick got me to have a sour, and the lady was very nice, and I was like, "Are you sure you want to try a little bit or whatever?" And it was disgusting.
Actually, is that not the place where the Market Huddle was born?
It might actually be Mugshots.
That was like one of our first early beer things where we were like, hey, we should do something stupid like start a podcast.
Why didn't we ever go here for Huddle piss up then?
Oh, it's a small place.
It's a small place.
Yeah.
Plus, Patrick will just eat a bucket of chicken and then go into a food coma.
It's entirely possible that would happen.
Okay, I'm going to actually call it a night. You know why? I'm going to a concert.
Nice. Which one?
I am going to see Dawes.
Nice.
You don't know
No
who
idea.
Dawes
No
are.
comment.
No
I have
idea.
no clue.
No idea.
Yeah, you guys don't.
At least it's not fish.
Oh my god. Yeah. By the way, did you ever listen to Morris and find out?
No, I'm kind of scared, but I'm going to.
I listen. I'm always scared when he tells me like, "Oh, we talked about you." I'm like, "Oh God." Yeah, no, I'm scared.
It's a trap.
Yeah, it is. He's Admiral Akbaring it. If anyone knows what the Morris Chelina, what did he call it?
Easter egg.
Easter egg. So it might not even. You know what? People might not even have known that it was directed towards you.
Yeah, I'll have to go listen to it. I've been kind of putting off because I'm kind of scared what's gonna be uncovered.
No, I hear you. I know that feeling all too well.
Or Morse is trying to get me to listen to Fish. I'm not sure.
You know what? It's probably the episode that's just an hour of fish.
Yeah. I'll have to try to skip.
And you're going to be like sitting there going 5 minutes forward and it's still fish. 5 minutes forward. And like, oh, did I miss it? Where was the Easter egg?
Yeah.
And he really just wants to subject you to an hour of fish, which was basically the really funny part about that. It was only one song. Okay.
That's awesome.
Thanks for tuning in, everyone. Have a great week.
Thanks, everyone.